Before the market opens, let's identify where the highest probability supply and demand zones are forming. By the end of this forecast, you'll know exactly which markets I'd be watching this week and which one I think offers the best opportunity. Let's get into it. So as always, we will begin with the DXY, the US dollar. If you look at a 4-hour time frame, it really looks like the dollar is extremely weak. And I mean, nobody can deny that. Look at the massive sell-off we have seen, but it's important to consider the higher time frame context. If you just look at the weekly time frame here, I've been talking about this for so long, we have a weekly trend line currently being respected. And not only that, these black dotted lines represents a 1 month area of demand. So what that means is we have not only a weekly trend to the upside, but a weekly trend coming off of a monthly area of demand. That's why I've remained bullish on the DXY. I will admit though, if we can get a close below this trend line, that's a bearish sign, and my entire bias long on the dollar will have to change. If this trend line continues to hold, I think we will be pushing up to the weekly supply at 103.06. So based off of the weekly trend line, based off of the monthly demand and control, based off of the fact that we have a daily trend line that is currently being respected as well, I am remaining bullish on the dollar. However, again, it's looking extremely weak as far as the lower time frames go. The thing I'll be watching out for next week is to see if we can break this high. If we break that high, we will have a new 4-hour trend to the upside, and that will be a bullish sign. If we do start to see the dollar really begin to rally, we have a couple of 4-hour supply levels that I think will be broken, but I think we will see some hesitation around them for a couple of days. But ultimately, since the higher time frames are showing us strength, not weakness, I am expecting the dollar to continue to rise. But again, if we break the weekly and the daily trend lines, then I'll have to change my tone. So just like the inverse of the DXY on the euro here, we have that weekly trend line that is currently being respected. Not only that, we actually push right into our daily area of supply on the euro on the daily time frame at 115. We got a test. We came back in for a second test, so not the highest odds situation. So what I'm going to be watching out for this week to determine what's going to happen on the euro is if this trend line can continue to hold and if this supply can continue to hold on the euro. As far as trading it goes now, we had a little set and forget trade right here. Some of you are probably in this trade depending, how, if your short entry looked, if it's at the proximal line, you're not in the trade. But if you do a wider entry like that, then you're probably in that trade. It made me a little bit nervous because we were so close to testing it, but the fact that this supply zone on the 4-hour chart was embedded inside of that overall daily supply made it a more high odds situation. So as far as trading the euro goes now, what are the options? There's actually quite a few. If you're bullish, we have this 4-hour trend line. That will be our guide for 15-minute time frame longs. So what I'm saying is as long as this trend line's holding, you could look for longs on a 15-minute chart. But we have to be cautious with that because, again, we have daily supply in control. Daily supply is stronger than a 15-minute chart. You could still technically trade at the zone. It's not technically hit, so that is an option. If you're bearish on the euro, we could wait for this trend line to be removed, and any supply zone there could actually be a nice little confirmation trade. And if you're bullish on the euro and we do get a significant pullback, we do have a demand zone down at 113. It's pretty good. I think we could see a move off of it, but I'd be aggressive with trade management due to the fact that we are bullish on the DXY. Moving on to the forecast for gold. So I've been talking about this supply zone for quite a while now, and it is clearly being respected. We got so overextended on gold, pushed up right into our daily supply, and so far seen a nice move off of it. When we broke this downward trend line, we created a new area of demand at 41.12, and I'm excited about it. I think gold has been selling off so aggressively that if you are bullish, this daily demand is going to be a great opportunity to look for confirmation trades on like an H1 chart, an H4 time frame as well. Even the day trading time frames would be fine, but I'm excited to see if we can get a pullback down to that daily zone. So for now, shorts are actually in play on gold due to the fact that we do have a daily supply that is in control. I was telling the members like the day before one of the breakdowns, we came so close to the zone. The members were a little bit worried about it, but I was telling them, yeah, it makes me nervous that we came so close to the zone. But the fact that this supply zone, very similar to the euro, I mean, look at the zone anyways. It's a great basing. Move away is awesome. The fact that it was inside of the overall daily supply as well made me more confident in that trading setup. And then would you look at that? what a trade from the zone. Unfortunately, didn't get the entire move because, again, I've been telling the members and even telling you guys, we want to be aggressive with trade management on markets like gold right now, just due to the nature of the markets with Trump tweeting and this and that. It's just a little bit too crazy, so we're not always going to catch the biggest moves. But this trade was called out for the Diamond members in the daily market breakdown video, which is a forecast I release every single day for all of the members. If you want to trade alongside myself and the members, join the Diamond membership, where you will have access to the 38-page supply and demand zone PDF, which will be your complete trading guide, the daily market breakdown videos, which are forecasts that I release every single night for the members to trade alongside myself, step-by-step video lessons A to Z, covering everything you need to know on supply and demand trading, the Sunday strategy Zoom session, where members submit homework, and it's an interactive 1-hour call where we go over all of your homework and every trading related question, private access to myself inside of our private Discord group where I answer all of your trading related questions, and finally the Sunday live stream forecast where we break down over 30 markets together. And it's not just me. Here are some of the members and some of their trades they've been taking lately, absolutely killing it. And we also have some amazing reviews from some of the past members sharing their experience within the group. So if you're ready to trade alongside myself and the community, join the Diamond membership today. Links in the description down below. So this trade has already played out. There is no need to be trading at that zone anymore. So how do we go about and trade gold now? There's really two options. If you are bullish on gold, if we break that supply zone, any demand there is going to be a good zone, especially since it's proven supply, meaning we already saw a reaction off of it. If we do get a pullback down to this demand at 41.83, it's a nice little rally-based rally. I think we could see somewhat of a move off the zone, but I would be aggressive with trade management if you are trading at that zone and trading in gold in general. And another reason I'd be aggressive with the 4-hour zone is because it's right before the daily zone. And if we do get a significant pullback, it's most likely we just get a pullback down to the daily area of demand. Alrighty, on to the forecast for the S&P 500. Talked about this in last week's forecast. We removed the all-time high. We are at record highs on the S&P 500. When we broke to the all-time high, we had a new area of demand created at 76.10. It's not the best zone I've ever seen, that's for sure, but it will definitely be good for confirmation trades, for swing trading. So if we do see a pullback on the S&P, it's really no worries. We're going to be pulling right back into an area of demand and on the daily chart, and we have a nice trend line as our guide to the upside as well. As far as trading it goes now, we had this supply zone, and this is a good little lesson here, so make sure you pay attention. This was a great zone. I mean, the basing's not the best, but the move away is fantastic. Not only that, we had a very clear area of liquidity. Clear area of resistance, which means retail stop losses will be right into our zone. It's about as good as it's going to get. The issue is you're shorting the indexes, or you're shorting the stock market. Not the best idea. I personally never short the stock market based off of my experience. Look at that. We blew right through the zone, and that can happen with supply and demand trading. Sometimes zones just absolutely blast through. So just trying to be transparent here. That was a losing zone. I personally didn't take it because it's in my rules. I do not short the indexes. When we broke that zone, the good news is we created a nice area of demand at 77.73. It's a good zone. I think we will be seeing a deeper pullback on the S&P. However, this zone, it's a pretty good zone. The basing is mediocre. The move away is fantastic, but I like that it made an all-time high and it removed an opposing zone. So if you're bullish, I think this zone could be good for a semi-aggressive trade, management, meaning you don't want to be looking for just a one-to-one. You don't want to be looking for a massive trade. I'd be semi-aggressive, meaning if you get a move out, maybe move your stop to half risk, get another leg out, sell 80%, move your stop loss up. You'll have to experience different types of trade management, but that's what I would be doing off of that 1-hour zone. And the reason is because on the 4-hour time frame, we have two pretty good zones at 76.36. They're both pretty good. If you are bullish, that is our first zone for a potential long trade, and the next zone down below. Which one do you pick? Well, it's tough to pick, right? I'm not going to get into too much detail on these zones because this is just a public forecast. However, when we have two zones like this, you kind of just have to pick. You either pick this one, or you trade both. Let's just say you take a loss on both of these zones. You're down 2%, and then maybe next week you hit a nice 3-to-1 trade. Now you're up 1%. You have to understand that normal drawdowns are normal. We're just going to have them. They're two good zones. Pick which one or trade both. On to the forecast for the USDJPY. I talked about this last week. We removed this upward weekly trend line. Now, I was a little bit hesitant to really, it is removed, but I'm a little bit suspicious of it. That's why I mapped out this low. basically this, if we break the low, it's going to be okay. I'm going to admit it's not a fake out. We're really starting to see downward pressure, but I'm kind of suspecting this is just some sort of fake out. When we remove the trend line, we created a pretty good supply zone at 162.20 on the weekly time frame. I still would be aggressive with trade management, but this is a good little weekly supply zone to look for confirmation trades on an H4 or an H1 time frame. If you are bullish on the year on the USD yen, that is going to be our profit margin up to that weekly area of supply. I'm not even going to look at the 4-hour or the 1-hour chart. I'm just going to be honest with you guys. I actually care about my subscribers, right? I'm not just trying to, oh, here's a setup here, here's a setup there. I don't see anything on the end. This is absolutely garbage price action. There's really nothing to go off of. So I respect you guys. I'm not just going to come on here and say, oh, make something up just for the sake of the video. I respect you guys. I respect my subscribers. If you guys do appreciate that, hit that like button if you are enjoying this forecast. That's all I really ask. And of course, subscribe if you are new to the channel. I actually care about you guys. I'm not going to have you guys making horrible decisions. And right now, based off the 4-hour and the 1-hour chart, trading the USD yen would be a horrible decision. Alrighty, on to the forecast for the GBPUSD. We talked about it last week. We were waiting to see if we can remove that high, and if we did, we would create a daily upward trend. And right now, we have that. So that's definitely a positive sign. It does contradict our DXY US dollar bullish idea, but just because we made a trend line, it doesn't always mean we're just going to continue to go up. You could easily see a sell-off and a break of the trend line, but it's definitely a positive sign if you are bullish on the pound. We have to be careful trading though, because we are basically sitting right at the high. But as far as trading the pound goes, it's actually extremely clear right now. Right now, we have a 4-hour trend line to the upside. That is our guide for 15-minute time frame longs. And what I mean by that is if you trade supply and demand, support and resistance, chart patterns, indicators, oscillators, whatever, as long as this 4-hour trend line's holding, you could be doing that on like a 15-minute time frame because it's relative to the 4-hour trend line. We don't want to be getting in, it just gives you more room for profit margin when your stop loss is based off of a day trading time frame. That's what I'd be doing if you are bullish and you are a day trader. The other option is if you are if you're bearish, we need to wait for this trend line to be removed, and any supply level there is going to be a nice little supply zone for a short trade, and that goes along with our US dollar bullish bias. If we do get a significant pullback, we have a clear demand zone down below at 1.33 with a potential liquidity trap here. I want to see another reaction off of it because it's not the best liquidity trap anyways. That's what I'll be waiting for. And if we do, it's going to be a nice little setup for aggressive trade management trade. Again, I say aggressive because we are bullish on the dollar. But that's a nice little 4-hour zone down below if you can be patient. Alrighty, on to the USDCAD. We are talking about this weekly zone, and I was incorrect. I mean, we still got a nice 4-hour long trade inside of that weekly and daily zone, so it worked out. But the zone ended up breaking, and I'm not surprised, right? The zone was very mediocre. We got such a quick return. The move away was very mediocre, and we're kind of in a sideways market overall. Yes, we are technically in a trend, but if we just kind of zoom out, it's kind of sideways, right? So it's not the best situation here on the USDCAD. Not only that, we have a pretty strong looking daily downward trend line right now on the USDCAD. If you throw a channel tool on this trend line, you can see we're quite overextended. We are sitting at the bottom end of that channel. So we could expect to see maybe a rally towards the trend line. And I mean, I'll probably talk about the zone in the next couple months if we don't get a pullback, but it's a decent little daily supply above for a potential short trade. And I'm not saying take the whole daily zone, but it's going to be a good area to look for swing trade shorts inside of that daily area of supply. As far as trading the USDCAD right now goes, this is pretty much the top setup of the week, in my opinion. We have a 4-hour trend line to the downside. We are very overextended, so I would probably avoid shorting at this moment because you're basically shorting at the bottom of a channel, not the best situation. The good news is we created a very nice 4-hour supply. The basing's good. The move away is pretty much perfect. Removed a supply zone. It's a great zone at 1.4. Again, since we're bullish on the dollar, I would recommend aggressive trade management, meaning don't get greedy, don't look for a massive trade, move your stop to half risk, move your stop to break even, whatever you got to do. But that is our 4-hour supply zone for a short trade on the USDCAD. And of course, if you don't feel comfortable with just an entry, stop, and take profit at the zone, if you're a day trader, you could look for confirmation on a 15-minute chart or even a 5-minute time frame if we do in fact contact that 4-hour area of supply. Alrighty, moving on to the forecast for the Aussie US dollar. Not much to go off of on the weekly or the daily time frame. Really no trends, no higher time frame zone in control. So not the most good looking higher time frames. However, the 4 hour chart's pretty clear, very similar to the British pound. We have a nice 4 hour trend line. That is our guide for 15-minute time frame longs. As long as this trend line's holding, that's going to be our guide for the longs on the 15-minute time frame. We have a kind of a liquidity trap here. It's not my favorite situation at this 4 hour area of demand. Again, since we're bullish on the dollar, all longs, we want to be aggressive with trade management. So if we do get a pullback down to the zone, another reaction off this liquidity would really make me more confident in this trade. But it's pretty decent. I am kind of concerned because it's kind of just a pivot low zone, but the move away is good. Removed a proven area of supply. So at 0.703, I do think we could see a small move off of that area of demand. The better zone is actually sitting all the way down here below this potential liquidity trap as well. So that is our ideal situation to get in long at that 4 hour zone. But it doesn't mean we can't get a nice trade off of both. They're both pretty good. I do prefer the location of that one and the fact that it is a original zone, a rally base rally. Moving on to the forecast for the USD Swiss, we had a nice daily trend line that was very cleanly removed here. The question now is, will we be pulling back down to that daily demand? That's going to be a decent area to look for potential swing trading longs at. So we will talk about that if we do, in fact, get the pullback. But clearly, it's looking weak, but not when we look at the weekly time frame. We actually have a very nice weekly trend to the upside right now on the Swiss. Let's throw a channel tool on this to determine where we are at on the trend line, and we're pretty much sitting just above the 50% mark. So not too overextended. I mean, we could see a pullback maybe down to that daily man, but it's not too overextended. It's still looking somewhat bullish as far as the weekly time frame goes. As far as trading the Swiss goes, it's really not the best chart. I'm not really seeing any fresh zones except for all the way down here on the 4 hour time frame. So down at 0.799999. That is our demand zone for a pullback entry long, and it would be going with the weekly trend. So it's actually a pretty good zone. It's old, so what I'm looking to see is another reaction off of this clear area of support. That would really make me confident that there are retail stop losses here, which would make it an even higher odds trading situation. If you are a day trader, we have this 4 hour trend line to the upside. So again, if you're a day trader, that is our guide for longs on a 15-minute time frame. The issue is we are well above the 50% mark of the channel. So in the sweet spot, the golden zone would be in here. What that is below the 50% mark and above the trend line. So anywhere in the sweet spot, that's going to be our sweet spot for looking for day trading longs on a 15-minute time frame. Moving on to the forecast for crude oil. Nice reaction off of our weekly zone we've been pointing out since it was formed. There's just not much to go off this time frame. Very tricky to determine the direction of oil. The daily trend line was respected here as we clearly pushed near it and reacted to the downside. So my gut feeling is telling me we might go back down to that weekly demand and continue to trend down on crude oil right now. And I'll be honest, I'm really not seeing any fresh zones on the oil charts. However, we are setting up potentially nicely for nice trades. I want to see this low removed. If we remove that low, we will have a trend to the downside on the 1 hour chart, and that trend line will be our guide for 5-minute time frame shorts. So not really seeing anything on oil right now. However, it is potentially setting up nicely, and right now we just got to be a little bit patient, and patience pays. Remember, when you're not in a trade, that is basically a trade, right? You're preserving your capital. On to the Bitcoin chart on the weekly time frame. We do have a weekly trend line to the downside. We are near it, which is most likely why we are seeing somewhat of a pullback here on the Bitcoin chart. As far as the daily chart goes, there's really not much to go off of here. However, we have a couple of options. So if you're bearish on Bitcoin, this is our 1 hour trend line guide for 5-minute time frame shorts. As long as it's holding, that's going to be good for shorts. If we remove the trend line, any demand zone there is going to be a potentially decent trading setup. But again, since the weekly trend is down, I would be aggressive with trade management. We also had a 4 hour demand zone here. Pointed this one out last week. I believe I did in last week's forecast. It removed the trend line. So far, decent reaction off of the zone. Again, this is a counter trend setup. Remember the weekly trend line? So if you're buying in a downward trend on the weekly chart, it's a little bit lower odds. It doesn't mean we can't get involved in the setup, but what that means is your risk to reward tool, your risk to reward should look something like this, or sorry, 1-to-1, something like that. And then if we do get another leg up, take your stop, put it at half risk. Even right now, right? We got a nice deep test, 50% of the way in. So I think a stop below that low, or 50, which is basically 50% of the way in, would make sense. You're basically cutting your risk in half. If we get another leg up, move your stop to break even, maybe sell 50% of the position, right? And then just maybe get it some wiggle room. What I don't want to see in a situation like this when you're trading counter trend is a massive risk to reward without ever moving your stop loss. It's just a recipe for disaster. So aggressive trade management would be needed here. And as long as this trend line, or as long as that demand's holding, we could be looking for 15-minute time frame longs, however you trade inside that 4-hour area of demand. If you guys want access to my full-length forecast, join the Diamond membership where you will have access to that, as well as my daily market forecast, the full course supply and demand PDF, and much, much more. Make sure you guys subscribe so you can catch next week's forecast as well. And I always appreciate a like. Thank you guys, and I'll see you in the next video.